More importantly, you need some facts, especially facts about this outbreak, because the outbreak is all about fear. And as I told you, the fear then goes right down into a rush of stay-at-home commerce. See, I think the facts and the concomitant reversal of rates from the ridiculous lows that they allowed, that's what allowed the market to roar today. The facts and then the switch of the yields. See, there are very few people who have any real, let's say, gravitas when it comes to this coronavirus. I mean, you hear these people come on TV and they say things, but there's only one guy that we all revere. Only one. His name is Dr. Tony Fauci. And he did breakthrough work with AIDS and is part of the government's apparatus that was allegedly been silenced by Vice President Pence. But if Fauci's being silenced, it's odd to see his byline in the most distinguished publication in healthcare this weekend. In healthcare forever, but this weekend is byline. And that's the New England Journal of Medicine. In the single best article I have read on this epidemic, and it's not it's not to sell papers, it's titled COVID-19, Navigating the Uncharted. Fauci notes something huge. There's a study of 1,099 laboratory-confirmed patients, and they showed a mortality rate of 1.4%, which is what we keep hearing about, 1.4, 1.4, 1.4. Why is this so important? As Fauci explains, if one assumes that the number of asymptomatic or minimally symptomatic cases is several times as high as reported cases, the case fatality may be considerably less than 1%. In other words, if the denominator is much bigger, then maybe we're not in as much trouble as we thought. And here's the statement that I think gives credence to this rally. Quote, this suggests that the overall clinical consequences of COVID-19 may ultimately be more akin to those of severe seasonal influenza. Boom. We've been hearing that it might have a 2% fatality rate. 1.4% is much lower than that. And it's even possible that after reading this article, you have to believe that 1.4% is way too high. Fauci goes on to note that the real number could be as low as 0.1%, or like the 1968 flu season that killed 32,800, or the 1957 flu season that killed the equivalent of 107,000 in today's terms. The death rates for pandemics tend to be much higher overseas than they are here. Our healthcare system isn't perfect, but it's a lot better than China's. I felt somewhat reassured by this article that is available online and makes you put things in perspective for the first time since this began. Does it mean all this panic was much ado about nothing? Absolutely not. The coronavirus is still a serious problem. The disease is so easily transmitted that you can see many people deciding to stay home and wait it out if they can afford it. And that's why I keep recommending the stay-at-home economy stocks like a Zoom Video, Adobe. We know that China's been practically shut down for the better part of a month. And anyone who works at a business that shuts down because of the virus is going to take a hit. That's why I think it's a very good time to reevaluate your portfolio, sell the stocks into strength that we have that I think are going to continue to go down in a corona-induced slowdown. For example, even with a lower death rate, you should stay the heck away from travel and leisure stocks because no one wants to catch the disease.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.